Welcome to News Beacon, your trusted source for breaking headlines, global insights, and sharp analysis from around the world. If you're new here, don't forget to hit that subscribe button and turn on notifications so you never miss an update. On August 27, 2025, Beijing stunned the world by slapping a 200% tariff on a broad range of European goods. This unprecedented move sent shockwaves through global markets and left European exporters scrambling to assess the damage. This is more than a trade dispute. It's economic warfare, targeting luxury cars, fashion, agriculture, and machinery at the core of Europe's economy. The tariffs hit some of the most iconic European brands, from high-end automobiles to gourmet food products, threatening to disrupt supply chains and consumer markets. European manufacturers, farmers, and businesses are now facing an uncertain future. Factories that produce luxury cars and industrial machinery, as well as vineyards and farmlands that export premium wines and cheeses, are all bracing for significant losses. The move is clear retaliation for Western tariffs and political pressure, signaling China's refusal to back down. Diplomatic tensions have escalated, with both sides digging in their heels, making it clear that this standoff could last for an extended period. European markets plunged, automaker stocks nosedived, and the euro weakened as panic spread. Investors are worried about the long-term implications of this trade war, fearing it could lead to a broader economic downturn. China's terse statement blamed Western protectionism, making it clear this is a calculated show of strength. The Chinese government is sending a message that it will not be bullied by Western economic policies, and is prepared to take drastic measures to protect its interests. The EU now faces a stark choice: retaliate, negotiate, or risk deeper economic pain. European leaders are convening emergency meetings to decide on a course of action, weighing the potential benefits and risks of each option. The economic impact is already being felt, with closed shops and empty factories becoming a common sight. Business owners are stressed, and economic indicators are showing negative trends, painting a grim picture for the future. The global trade order has just been upended, trade routes are disrupted, stock markets are in turmoil, and world leaders are scrambling to respond to this new reality. The ripple effects of China's tariff shockwave are being felt around the globe, signaling a new era of economic uncertainty. Tariffs are taxes on imported goods, designed to make foreign products more expensive and protect domestic industries. Governments use them to shield local jobs, pressure other countries, or gain leverage in negotiations. But tariffs are a double-edged sword. They raise prices for consumers and often trigger retaliation. The 200% tariff from China isn't just about competition, it's about blocking European goods entirely. This is economic coercion, not simple protectionism. The goal: inflict maximum pain and force Europe to respond. Tariffs like these can quickly spiral into all-out trade wars. The stakes for global trade have never been higher. China's latest move marks a significant escalation in the ongoing global tariff war, a conflict that has been steadily intensifying over the past several years. This battle, which has its roots in long-standing economic rivalries, was largely set ablaze by the United States, whose aggressive trade policies have sent shockwaves through the world economy. Tariffs, once used sparingly as tools of negotiation, have now become the primary weapons in a high-stakes economic standoff that is reshaping international relationships and global markets. Under President Trump, the U.S. administration launched a sweeping campaign of tariffs, targeting not just traditional rivals like China, but also long-standing allies such as the European Union. These tariffs were imposed on a wide range of goods, from steel and aluminum to electronics and agricultural products, affecting billions of dollars in trade. The message was clear: the U.S. was willing to upend established trade norms to protect its own industries and force trading partners to the negotiating table. The European Union, unwilling to back down, responded with its own set of retaliatory tariffs. U.S. products like iconic tech gadgets, motorcycles, and even Kentucky bourbon whiskey suddenly faced steep new taxes as they entered European markets. These measures were designed not only to protect European industries, but also to send a strong political message. The EU would defend its economic interests and stand up to American pressure. In response, the U.S. threatened to escalate further, proposing tariffs as high as 200% on luxury European goods like champagne. These threats were not just about economics, they were about leverage, signaling that no product, no matter how symbolic, was off-limits in this tit-for-tat trade war. Meanwhile, China, which has long been the primary target of U.S. tariffs, has shifted its strategy. Now, Beijing is turning its attention to Europe, imposing new tariffs on European goods, and opening a fresh front in the global conflict. This move is a clear signal that China is willing to use its economic power to influence not just the US, but also other major players on the world stage. Each side is now wielding tariffs as economic weapons, disrupting global supply chains that businesses and consumers have come to rely on. The uncertainty created by these trade barriers has forced companies to rethink their sourcing strategies, delay investments, and in some cases, pass higher costs on to consumers. The result is a tangled web of duties, confusion, and rising costs that ripple through every level of the global economy. Small business owners, multinational corporations, and everyday consumers alike are feeling the pinch, as prices rise and the future of international trade becomes increasingly uncertain. China's decision to impose a 200% tariff is not an isolated act, it's the latest calculated move in a complex ongoing chess match between the world's largest economies. Each new tariff, each retaliatory measure, is a strategic play designed to gain advantage, extract concessions, or simply demonstrate resolve. As economic nationalism rises, countries are increasingly prioritizing their own interests over global cooperation. This shift is fueling protests, political debates, and a growing sense of uncertainty about the future of globalization itself. The old rules that once governed global trade are breaking down, replaced by a new era of unpredictability and competition. In this environment, no nation is immune from the consequences, and the world is left to navigate an uncertain economic future. Massive tariffs like China's 200% levy ripple through the global economy, far beyond the targeted industries. Prices soar, demand collapses, and European companies lose access to a vital market. Supply chains unravel, job losses hit not just Europe, but suppliers worldwide. Companies scramble to relocate production or absorb losses, but replacing China's market is impossible. Global growth slows as uncertainty poisons investment and hiring. The IMF and OECD have already downgraded forecasts, citing trade wars as a major threat. Tariffs force costly, chaotic business shifts and threaten recession. The world economy is more fragile than ever. Europe's leaders respond with defiance, vowing unity and a coordinated defense of their industries. China frames its tariffs as self-defense, rallying domestic support and asserting sovereignty. The US watches closely, seeing its own tactics mirrored and eyeing opportunities to pull Europe closer. Each side's rhetoric raises the stakes, making diplomacy harder. The EU is squeezed between two giants, forced to choose between confrontation and compromise. The words of leaders now shape markets and the path forward. The risk of a global trade war has never been more real. The real victims of this trade war are ordinary people and small businesses. French vineyards lose their biggest export market overnight. German factory workers face layoffs as car sales to China collapse. In Shanghai, boutique owners can't afford European imports, forcing layoffs or business closures. US consumers feel the pinch too, with new tariffs raising prices on everything from sneakers to coffee. The hidden tax of tariffs hits families at the checkout counter. For many, stable jobs and hard-won markets are vanishing in a political crossfire. The pain of this trade war is personal and immediate. Economists warn that China's tariffs could tip the world into recession. The IMF and OECD are preparing further downgrades to global growth. Europe faces stagflation, falling exports, rising prices, and shrinking consumer spending. US firms brace for weaker demand and market volatility. Central banks may be forced to keep rates high even as economies slow. Supply chains are being violently rewired, raising costs and uncertainty. Experts agree, tariffs destroy more value than they create. The world economy is smaller, riskier, and more divided. For consumers, tariffs mean higher prices, on wine and China cars in Europe and everyday goods in the US. Middle-class families are priced out of products they once aspired to own. Tariffs on steel, furniture, and toys drive up costs for businesses and households alike. Even a morning coffee can get more expensive as trade disputes ripple through commodity markets. The burden falls hardest on lower and middle-income families. The promise of tariffs is job protection, but the reality is a higher cost of living for all. In the end, it's the consumer who pays for the trade war. The world stands at a crossroads after China's dramatic 200% tariff. a move that has sent shockwaves through the global economy. This moment is more than just a dispute over numbers, it's a turning point that could redefine how nations interact, how businesses operate, and how ordinary people experience the world economy. The choices made now will echo for generations. The most likely path, at least in the short term, is escalation. Europe is already preparing to retaliate, with leaders signaling new tariffs and restrictions of their own. This tit-for-tat response risks deepening the spiral as each side hardens its stance and the possibility of compromise slips further away. The mood in Brussels is tense, with officials weighing the costs of action versus inaction. Yet, amid the rising tensions, a slim hope remains for urgent diplomacy. Behind closed doors, negotiators are scrambling to find common ground, but any breakthrough would require major concessions from all sides. The stakes are high, and the window for dialogue is rapidly closing. If leaders can summon the political will, there is still a chance to de-escalate and restore trust. The United States will play a pivotal and perhaps unpredictable role in any talks. As the world's largest economy, America's decisions could tip the balance toward either confrontation or cooperation. U.S. officials are under pressure from domestic industries and global allies alike, making their next moves difficult to predict. Their involvement could either bridge divides or widen them. If barriers become permanent, the consequences will be profound. Global trade could fracture into rival blocs, with countries forced to choose allegiances and supply chains unraveling. Decades of integration and economic progress could be undone almost overnight, as the world shifts from cooperation to competition. The very fabric of globalization is at risk of tearing apart. In this new reality, businesses will be forced to choose sides, navigating a landscape of uncertainty and risk. Multinational companies may have to split operations, abandon markets, or rethink entire strategies. The spirit of global cooperation that once fueled innovation and growth will suffer, replaced by suspicion and rivalry. The era of unfettered globalization is over. The seamless flow of goods, services, and ideas that defined the last few decades is giving way to a more fragmented, uncertain world. For many, this marks the end of an age of opportunity and the beginning of a period of adjustment and challenge. The next weeks will be critical. Decisions made in capitals around the world will determine whether the world descends into a costly trade war or finds a way back from the brink. The clock is ticking, and the stakes could not be higher. Every headline, every negotiation, every policy shift will matter. The outcome will shape prosperity and hardship for years to come. Families, workers, and businesses everywhere will feel the impact, from rising prices to lost jobs and shrinking opportunities. The choices made now will determine whether the world moves toward shared prosperity or deeper division. The global economic order is being rewritten before our eyes. As leaders gather and decisions are made, the world watches, knowing that the future of trade and the fate of millions hangs in the balance.